I think it's important to still remind ourselves that it's very early in the life cycle of an ETF. In many instances, it takes multiple years to truly kind of get all the cylinders firing in terms of the journey that you have to go on from an education perspective, from an institutional diligence perspective, from all the big wealth advisory platforms who each have their very intensive, typically multi-year processes where they vet these new products first to just allow their advisors, their tens of thousands of advisors, to add them to client portfolios, but then the whole other step up from that, which is to actually consider putting these in model portfolios, right? And so 16 months in, we're actually still pretty early. Gold today is much less volatile and has a much longer history. But Bitcoin is digitally native in an increasingly digital world, is efficient to store, can be transferred anywhere in the world in near real time at near zero cost. So it has some significant advantages too. I think there's no question Bitcoin has much higher upside than gold and lower downside, right? And so there's different flavors of it that investors have, and many investors are going to own both. We see lots of investors adding to both. We see some switching from, maybe they were 100-0 gold Bitcoin and they went to 80-20 or they went to 50-50. We see a lot of that, but certainly as a category, as a sort of diversifier and hedge, Bitcoin and gold is growing.